Welcome to today's feature presentation. Is there always something to trade? In this video, we want to offer private investors and retail traders a sound decision-making basis to act at crucial price turning points. People from different careers enter the world of trading with a work attitude, wanting to get things done, with a need to trade to feel comfortable that they accomplished something. However, we recommend to follow the attitude of the pros that only act at crucial price turning points, at assets and moments where prices move. When trading the financial markets, you invest your money for a certain period to yield a return. So you might do that as a day trader, opening and closing positions the same day, swing trader holding positions for multiple days, or long-term investor holding positions like weeks or months. Behavior-wise, the action of trading and investing is the same. However, trading leaves you less time for forming a sound decision. In essence, you need a solid decision-making basis to yield repetitive returns from the financial markets. Your decision-making basis will be to first of all find assets with a high probability chance for return. Yep, that's easier said than done. Limit the risk. So risk and reward of a trade are in a meaningful relationship to yield long-term returns, and only act when the odds are in your favor. My name is Thomas Barman. I'm your presenter today, and I want to make you aware of the risk in trading, and that I'm here as a trader and educator, not as a broker, dealer or financial advisor. The word never lose trading does not imply to never lose a trade. It comes from a concept of not accepting the stop loss but repairing the trade. We are a high probability trading house using algorithmic trading methodology, and I'll share this with you here in that presentation. There's basically a simple formula of how to make money trading. Yeah? You act at crucial price turning points and you work with the odds in your favor. However, that's easier said than done. Yeah? When we look together in a little bit of an odds calculation, we see, okay, it's probability of winning times expected gain divided by the possibility of losing times the risk to take. However, you see here there's multiple variables specifying if the odds ratio is in your favor or not. And that's where it gets complex to find a sound decision-making basis that works more often than not, because then you trade with the odds in your favor. And I'll invite you here with that presentation to follow me along how to fill this with means. The vast majority of financial market decisions are triggered by institutional investors. They work the fundamentals of the market, and with that they appraise balance sheet, management ability, sector strengths, competitive advantage, and a long list of specific details before they make an investment. Our recommendation: do not compete with institutional investors on a knowledge basis, because you'll not win. However, the action of institutional investments, buying or selling, leaves a trace that we can spot and follow with the help of our systems, and by our ability to open and close entire positions at once, while institutions have to scale in and out to not radically change the price of an underlying assets, we have an edge to compete and to follow sound institutional decisions. Our systems and charts tell when crucial price turning points occur, and this is why we say let the chart tell when to buy or sell. In a recent example, Warren Buffett swapped GM shares and bought into Taiwan Semiconductors, and we'll take that as a chance to look what did it do for the stock of Berkshire Hathaway, and how did our systems perform to indicate crucial price turning points. This is a weekly chart for Berkshire Hathaway, BRKB, and it shows you up moves framed in blue, yeah, so that's for example here, down moves in red, And at crucial price turning points, you see here buy or sell indications. Yeah, buy above a certain price threshold, and we only trade if that is fulfilled, or sell below a certain price threshold. Yeah, like here, sell below $335.11. That happened in the next candle, and with that, that stock was good to short. Yeah, there's indications also here on the chart where that didn't happen. Yeah, like for example here at that buy point, or at this buy point here, buy above $302.40. The price movement of the next candle never got through the threshold, and with that no trade was initiated. However, here you see 6 possibilities. 2 weren't coming into a trade, 4 started, initiated, and worked. And what you see also on the chart is we, by the system, define the exit. The exit is here, that gray dot on the chart, and this is where we want to exit the trade. Or you have a second possibility to trail with that red line, yeah, to the downside, and also here to the upside to come to target. But we have one clear thing: we call one speed unit the price differential between the entry and the exit. And after a 2 SPU move, there's only a 15% chance that we continue, and with that, that's definitely where you want to take your profit. Yeah, so therefore you see here we were acting at crucial price turning points here in March, and again in April, and again here in September, and recently here October, beginning of November, we had another opportunity to go long, and we fulfilled our target. And there was a second opportunity. Here would be the second SPU move, and this would indicate around that line here where our out would be. So this is why we say let the chart tell when to buy or sell. You will get an indication, and it stays right at these crucial price turning points to act along with buying and selling. In essence, we had 2 long opportunities, the one here and the most recent opportunity that we're in, and we had 2 short selling opportunities. However, the stock BRKB is hard to borrow, so that means most of the time your broker will not have the stock available for you to borrow and short sell, and with that you need a different strategy. Or if you trade out of an IRA, the SEC regulations will not allow you to short stock. But if you want to participate in the downside move of the stock, you'll need an option strategy. And this is where our never loss trading delta force concept comes into play. We simplify option trading by specifying the delta of each operation, the time to expiration to pick, and the maximum price to pay for following a simple strategy of buying puts or calls. If that is not given, yeah, if the price is too high, we'll need to change to a different strategy, but that's a different means. With the never loss trading delta force concept, we simplify decision making, and we'll tell you in particular how much is the maximum price you can pay for buying a put or a call to follow a move to the up or the downside. And the nice thing with that is option trading strategy allow for risk limited trades, because the maximum you can lose if you buy an option is the investment you made. The chart also shows that after you came to your exit point, you best take your exit and you move your money to an asset that has a price move. That's an intelligent strategy. Don't fall in love with a stock. Times change, long-term buy and hold will not work. You need strategies to participate in moves to the up and to the downside, and strategies that you can put in action for any share, even when it's hard to borrow. If you don't want to short sell, that you have an option strategy on hand to follow the price move. And we give you another example, swapping over to a popular stock, and we look at Tesla. And also Tesla is hard to borrow, so that means you have a hard ability to short sell the stock. However, with an option strategy, you can participate in the down move of the stock. Here you see 2 price situations at Tesla, one in April and the other one here in October, where short selling was required, and the stock that's hard to borrow is hard to short. However, with an option trading strategy, you have the ability to participate in those directional changes and make long-term money and move with where the market goes, regardless if the market goes up or down. Tesla again is on a weekly chart because we wanted to take different perspectives. So the question is, okay, how does the system perform on a daily chart, for example, on a stock that is rising? So we'll pick the next example, and here is ExxonMobil. Yeah, you see a daily chart here, and you see here what we do is we follow the direction with multiple entries along with the price move of the stock. So this is why we combine two systems here, never loss trading top line and trend catching, to follow that price move with clear-cut indication. So you see here, first price move came to that target, exit, re-entry, yeah, re-entry, re-entry. So we take multiple bites out of a price movement. Why do we do that? Because you never know how the price movement will go. At a certain point in time, institutions need to rebalance their inventory, and you don't want to get ripped apart. But with multiple indications along with the price move or trailing with the red line, you have the ability to follow with our systems, entering at crucial price turning points and following through with the trend catching concept. This bears the question how to find those trades, yeah, not to be late for a trade, because in hindsight everybody knows where to invest. The key will be with never loss trading top line, you have the ability with own scanners and watch list indicators to find those opportunities by your own will, or you subscribe to our never loss trading alerts, where we cater those opportunities to you in an Excel based email on a daily basis, pointing out daily, weekly and 4-hour happenings. Coming back to our question, is there always something to trade? If you are a long-term investor or swing trader, let your system pick when it's time to trade, and when there is nothing to trade, stay in cash and be ready for the next price move so it occurs, by letting the chart tell when to buy or sell. If you are a day trader, there is always basically something to trade. However, we also recommend for you to focus on something that is easy to go long and short with. Yeah, so then you get around HTB and all those issues. Yeah, and what you want to do is maybe taking a focus into futures trading. And we now give you two examples how charts can look and how a system can support futures trading decisions during a day. We want to invite you to the timeless trading concept of never loss trading. What it means is each of those candles is specified by the system what its length is, because it's the price movement. Yeah? And with that we found a very specific way to set high probability day trading decisions on the chart for you here, to the downside, to the upside. What you see here is the E-mini S&P 500 index contract on November 4 day session here. And so you see at crucial price turning points here you had sell indication, buy indication, buy indication. Those three indications in the day came through. What you see is on the chart basically 9 a.m. To noon, give or take. So three opportunities coming through. The background here is highlighted. Those are time-based channels. They help you to specify and find crucial points where you expect price turners. And so you saw here at the top returned and came to the bottom, and they returned and came right into the channel again. So this will all help your decision making basis. Let me do one thing. I'll magnify that for you. And so here you see the chart a little bit more clear. So sell indication, again, you have a sell threshold. Only if that's surpassed in the next candle, then you will enter, and you will know in advance where that threshold is. It's on our dashboard on the chart. And so with that you have a bracket order that you can place in the market, and only if the threshold is surpassed in the price movement of the next candle you will get dragged into a trade here to the upside. And again we'll do that right to that point. If you use the channels and we have break-ins or turning points, you can aim for a further out target than the one SPU target here on the chart. But what we do with that, because here at the red crossbar that's where the stop is, and is indicated, we always trade with the odds in our favor by considering the rule that I shared prior with you on every trading decision to the up and to the downside. On the same day, November 4, we have crude oil here on the chart, and you see one trading opportunity that came to target. The next one, this one was a loss. It failed, but here, high probability trading, 3 winners out of 4. That is what we call high probability trading, and we put it on the chart for you. Again, here we have the morning session between like 10 o'clock, give or take, until 4. Yeah, so throughout the entire day, when you add up the two charts, let's go back here and see this one. Yeah, so there were plenty of opportunities for you to participate, in particular when you think of that each of those price changes here signified about $300 to $400 of a price change per unit. To demonstrate that it didn't only work on November 4, I took yesterday's session here at the time of recording, November 21, and again the morning session here, the ES had a signal right around 10 a.m. to the short side, and that came home, and then afterwards we had here the reversal and break into the channel, and also this came to target. Yeah, and I do the same for crude oil. Yesterday I took that session here, and you see we have 1, 2, 3, 4, 5 opportunities that worked and one that failed. That's what we call high probability trading. If you are ready to commit to a new way of trading and a new decision-making basis, write us an email, contact@neverlosttrading.com, or call 866-455-4520, and we make an appointment with you to meet online where we can go through different trade situations and find out what works best for you. And also ask us for the year-end special. It's really a super year-end special where we combine systems and help you to make sound decisions as a day trader, swing trader, or long-term investor. We are more than 10 years in business, and we work one-on-one as trainers and coaches with you, focusing on your specific wants and needs at your best available time. So with that, make your appointment, contact@neverlosttrading.com, demo, and we are finding a day and time to get together with you to figure out what can work best. Thank you very much for your attention, and we are looking forward to hear back from you.